ASML stock is popping after the company announced their Q4 earnings. But is it too late? Is it too late to pick up shares of the giant and monopolistic lithography maker of ASML? We'll talk about that. We'll look at it both fundamentally and technically. I think you're going to have to reach into your wallet. You got some opportunity here. That is because over the last year, shares are still down about 20%, even year to date, roughly flat. Also, we'll look at the valuation of ASML as well. Look at it in historical context of the company. And despite the rise in shares after these Q4 results, I think you've got an interesting opportunity here. Now, these Q4 earnings came in. We've got them here listed in euros. I'll go through them in United States dollars here in a second. Couple of things to point out is number one, we'll look at the Q1 guidance. The Q1 guidance between 7.5 and 8 billion euros. The consensus was for 7.24. So they're coming well over above that. Okay. Typically when a company gives you this range, they want to come towards the top end of the range, if not beat that range. So ASML is kind of indicating that maybe they'll come in at 8.1, 8.2 next quarter. So that is very good as well. You also had what's called a bookings number over at ASML, where they're booking business because these machines are very complex. They take months, if not a year, to build. They acquire orders, and these are referred to as bookings, and they book the business, and then it's recognized as revenue later on. Last quarter, I remember when we did an earnings video, it was rather disappointing. The book of business had fallen off, but that could be related a little bit to seasonality for the company, as the Q3 sometimes can be a rough quarter, and it followed through in Q4. You saw a massive uptick in bookings, the highest over the past 3 quarters, and relatively for ASML, a very, very strong bookings quarter. Now, as we start to look out for this company, I mean, you're going to do 37, 38% growth. It was more or less kind of expected by Wall Street, but the guidance from ASML not only confirms that for Q1, but also kind of bumps it up a little bit. Also gets us a little more excited as we move into the later parts of 2025. Things are possible. Also, we'll notice some things from the balance sheet over at ASML here in a moment. They have the inventory to deliver on this. So those are all very, very positive signs for ASML. Also, a positive sign is the valuation. This stock has always been relatively highly valued. Part of it is the fact that they've got a very wide moat around their business. They do pay a small dividend as well. For investors outside of the United States and Europe and those types of places, this is one of those companies that you gravitate towards because it's one of the largest and best companies outside of the United States. So it always has had a relatively high multiple, at least from a price to earnings perspective. Their revenues and their profits are a little bit lumpy with ASML. Sometimes it's good, sometimes it's bad, just by the nature of the product that they sell. But what I've noticed in terms of the valuation, now I've got a historical price to earnings. This is a trailing 12-month price to earnings. It's not necessarily looking forward. But look, anytime this company's gotten underneath, and it sounds crazy to say, anytime it's gotten underneath kind of a 40 times price to earnings ratio, it has found footings, usually in kind of the low 30s, and tended to bounce back. And here we are. We're not near the bottom of the range, but we're getting close. It is also supported technically as well. Both of these charts tend to line up. So this is why some people ask me like, hey, why don't you show more traditional valuation metrics? Well, believe it or not, most traditional valuation metrics are actually tied to price. So you should just look at price rather than try to complicate things. But this is 2 ways to show it to you. When the price to earnings multiple gets to a certain level with ASML, it tends to bounce back, and it's supported by the price chart as well. That's why I tend to just focus on price, because it is actually one of the most important indicators. Now, in terms of the fundamentals over this company, the net sales came in at about $9.3 billion. The previous quarter a year ago was for 7.2. So we grew the top line by about $2 billion. Now, this was a particularly good quarter because when you look at the full year, you went from 27.6 up to just, and I say just, $28 billion. So it was a particularly good quarter for ASML. They really delivered a lot of units. What's so impressive about this company, and one of the reasons why, many reasons why this company has a high multiple, but the big reason is you got massive gross margins on this one. $9.3 billion in revenue, $4.8 billion flows down to gross profit. Now, the rest of this is even more impressive. On R&D, they spent just $1.1 billion. Okay, they added $2 billion to their net sales, but look at their R&D. Barely ticked that up by about, I think that's about $70 million. So barely a tick up there. SG&A costs, which is your selling costs, also barely ticked up from 284 to 318. So your income from operations went from 2.4 billion up to close to $3.4 billion. So off of $9.3 billion in revenue, we're kind of doing napkin math here, but you're getting about 30% operating margins, which means 30% of your revenue flows all the way down to this income from operation. Now you pay some taxes, some other stuff, and you get down to a net income number of $2.7 billion for the full year. Doesn't paint the same story. This was a particularly good quarter. Net income slipped this year compared to last year, 7.8 billion down to about 7.6. Now, from the balance sheet perspective, it's particularly interesting when you see a company like this where the revenue's growing, they give very good guidance. They also have bookings that are starting to tick up, meaning the book of business is starting to materialize, and they're going to have to deliver these units later on. This is a case where you actually want to see the company increasing their inventories. And you come down here to ASML and you see inventory from $8.9 billion this time last year up to $10.8 billion. This is a good sign. There is a reverse here as well. You look at companies like Nike, which are having their sales decline, a Boeing, there's other companies out there. Not saying that you don't invest in these companies, but from a balance sheet perspective, you actually wouldn't want inventories to be climbing if the sales are declining, because it means you're going to have to discount. It means you're going to be stuck with this inventory. You're going to have to figure out a way to do that. ASML's got increasing revenue, increasing demand, and so you want to see increasing revenues, and that's exactly what you see here. Now, Equity Empire subscribers, I've got a course coming from a balance sheet perspective, so if you want to go into more nuance of this type of stuff, I'm certainly going to have that. That'll be for subscribers, and we'll get into a lot of examples of that, and this is just one example where you do want to see inventory increase, so that's a very, very good thing. Cash and cash equivalents also increasing over this company, $7 billion up to $12.7. Sometimes when you see this uptick in cash, you wonder, well, did they take out some long-term debt or something like that? Well, no, that's not the case here. 4.6 down to 3.6 on that long-term debt side. So you come down here to cash flow and say, well, where's all this cash coming from? They've got more cash, they've got more inventory, things are good, no more debt, or less debt compared to last year. So the second column is our most recent quarter. We pull down the net income of $2.7 billion. We'll come down here to net cash provided by operating activities, and it's explosive. $3.2 billion of operating cash flow last year, all the way up to $9 billion. Now, it was benefited by this change in assets and liabilities. This tends to be more of an accounting thing rather than kind of a business model thing. They had a huge benefit here, nearly $6.3 billion. So what you can do as an investor is you could strip off maybe $6 billion, $5 billion here. It's still an impressive quarter year over year. You look for the full year. Again, they've benefited here from this change in their assets and liabilities, which again, more or less an accounting thing. So they've benefited from a cash perspective. So it makes it look maybe slightly better than on paper, but even when you add back a portion of this, strip it away, still a fantastic quarter. Also, very interesting from this company is they don't have to invest a ton in property, plant, and equipment, okay? Just $704 million in the most recent quarter, just $2 billion over the last year. So you can kind of see here where all of this cash and the ability to build up inventories has come over at ASML. You've got really strong cash flows. You're not really having to reinvest it in property, plant, and equipment. And you come down here, you are paying a dividend, but it's just, I say just, $600 million, and that's about it. So your net positive cash flow in the most recent quarter was $7.7 billion. And that gets flowed right to the top of the balance sheet. Over the past year, you grew it by about $5.7 billion. So it shows you a little bit how you can connect the dots from a company from a financial perspective. You see a company like ASML and they're like, wow, they really grew their cash. Come down here to debt. Well, they actually decreased that. And then you come down here to cash flow and you basically confirm it. So this company is doing things very, very well. They've got very strong cash flows, financially very secure. They deserve a premium multiple just based on the balance sheet, the business model, the gross margins, the fact that they don't have to reinvest this. It's not like a Taiwan Semiconductor, which is an incredible company as well, but they don't have as much capital requirements as a company like Taiwan Semi. And so this is a very, very, very good stock. And you might say, well, should I buy shares? Well, I tend to set up my stock charts in these channels. You want to put this on a logarithmic scale because it first of all, it cleans up the chart, but also you're just looking for percentage change rather than a dollar change. That's why you put these things on kind of a log scale. This one has been in about a 20-year channel, meaning the stock is traded in this channel. Yes, occasionally we've gone over and above it, and occasionally we've come down here and tested the bottom. I also divide my channels in half because yes, we are patient investors, but you don't, over 20 years, you've only had 1, 2, 3, 4, 5, 6, 7, 8, maybe 8 times where you could have gotten this one at the bottom of the channel. So I would encourage you, if you want to go long a stock. Now, if you're trading, you're doing this short term, it's a different story because you have a wide range of stocks that you should be trading. You should be patient and wait till it hits your mark. But with a longer term investment, you're going to hold ASML if you're a young guy, 20 years, 30 years. Don't wait until it gets to the bottom to start your position. I start mine when you divide these in the middle. Anytime you get underneath the middle of the channel, that's when I start my investment. That's why I put a light green line, because it means you're like a little salt bay. So you're just sprinkling a little bit of your investment capital on a stock as it continues to move down. Because look, when you break the middle of the channel, you tend to want to continue to move lower. That is when you get a little bit, this is called, dollar cost averaging. This is just explained in a slightly different way. You start your investment at the middle of the channel, continues to move lower, you dollar cost average, you get all the way to the bottom. That is a back the truck up type of moment. And you'll notice on this channel, we tend to identify those areas and we get very, very vocal when stocks hit the bottom of the channel. Now, at the same time, when the stocks hit the bottom of the channel, you'll have about 500 people in your comments on your social media feed telling you how stupid you are to buy the stock. But if you want to trust a 20-year trend rather than people on the internet, I promise you the 20-year trend is going to be right a hell of a lot more than the comment sections of your videos. So there's ASML. I think technically it's a buy. Valuation, also a buy. Trends in the business, absolutely a buy. Things look absolutely fantastic. I've been holding this stock for a while. You continue to hold if you're not in it. This is a part of a broader semiconductor portfolio with NVIDIA, TSM, and certainly this company could fit right nicely into that group. You've got basically the trinity there that have huge moats around their business. I think you could toss Broadcom in there as well. And if you're going to hold 4 semiconductor stocks that are kind of the blue chip of all blue chips, it's going to be Broadcom, TSM, ASML, and NVIDIA. Hopefully you guys enjoyed today's video. We'll be back again with more later this week. Good luck with your investments.